This program is sponsored by WG Financial Group, where your retirement matters.
Coming up today on the RITE Retirement Show with Chris Wallace, healthcare, long-term care, and housing are almost sure to be the big ticket items for you in retirement. But will they be your biggest expense? Today, Chris Wallace not only helps you identify what could be your largest retirement expense, but also ways to help reduce that cost. Plus, you'll walk away from today's show with a list of your next steps that you can start to make a difference in your financial future. The RITE Retirement Show with Chris Wallace starts right now.
Chris Wallace with WG Financial Group has been helping families in our area plan for a successful retirement. Chris strives to understand all of your financial needs to help guide you on the path to your retirement goals, creating income in retirement, maximizing your savings, and minimizing taxes. Chris has the strategies you need to help you sustain a successful retirement. Welcome to the RITE Retirement Show with Chris Wallace.
Thanks for joining us today. I'm Luann Fulmer here with Chris Wallace, financial advisor and certified financial planner professional. The last thing you want is to make a misstep with the money you've worked so hard to save over the years. Today, we want to help you identify one of your biggest expenses in retirement and share strategies to help you keep more of your hard-earned money in your pocket. Chris, I'm excited to talk about this, saving our retirement assets.
Absolutely. I think when we're talking about one of the biggest liabilities or biggest expenses for a lot of retirees today that they don't often think about is it's going to be taxes. And I don't think that we think about it as an expense, because we just pay it, right? It's not one of those that really shows up on the budget as like a grocery line item or a utility. It's just taxes. But most people will end up paying, that will be their largest expense in retirement is their taxes.
Yeah, a lot of people think, health care or long-term care or housing, but it's taxes. So let's talk about how the different sources of retirement income are taxed.
Yeah, I think this is where the confusion starts to happen is I don't think that many people out there today understand how their income is actually taxed. Mm-hmm. So in retirement, we know that Social Security, only 85% of it is subject to being taxed, right? So we know that IRAs are subject to 100% ordinary income. The other area that we can look at is capital gains. We have that after-tax non-IRA account, and capital gains rates are 0, 15, and 20%. So understanding those is crucial, because you may be tasked with, if you're doing this yourself, trying to figure out which area is the best to pull from, and what's the most tax efficient way to pull money out of the portfolio. When we talk about Social Security being subject to 85% taxation, that is exactly why we tell our retirees to wait as long as you can. Now, we don't really try to get you to go to 70, because it's not right in all cases to go to 70. Mm-hmm. But we do know that the more Social Security income that you have coming in, the more base income you're going to have, and the less you will have to pull from other taxable sources. So we'll talk a little bit about that, I'm sure, throughout the show.
Yeah, we will. Okay. So tell us another key point that we need to know about as far as taxes in retirement.
Well, I think one of the key points is you want to be proactive with your taxes. Mm-hmm. You want to understand kind of what types of buckets that you have. So we talked about the pre-tax, the Roth, the capital gains buckets. You want to be proactive in your tax planning, because once you get to your tax day and you're doing your tax return, the discussion is all historical at that point, and you can't really do anything about it in a lot of cases. A lot of what's happened in the tax world has already taken place, and I think that you need to be a little bit more proactive about it. The other thing that I think we just don't know is what's going to happen in the future with tax rates. Now, we know through 2025, we know what they're going to be.
Right.
And if Congress doesn't do anything to extend or modify the current tax code, we'll revert back to the tax code that was in place when Obama was in office. And then when Trump leaves office in 2028, we don't know who's going to be in office, and we don't know what they're going to do with the tax code. So I think it's in everyone's best interest to really take a look at all of their taxable sources of income and be really proactive, and also really just try to think of different ways to kind of disinherit the IRS to some degree. Mm-hmm. Do what you can. If you can do conversions in a low bracket, then by all means do that, because you're only bettering your tax picture moving forward, and you're just shrinking the piece of the pie that the IRS gets, at the end of the year when you do your tax return.
Okay, so Obviously, our pension income is going to be taxed.
It
We need
is.
to talk about that for a minute.
Yeah, so pension income is taxed, on the federal level, of course, both in Alabama and Tennessee. There is no state tax in either state on pensions and on Social Security as well. And it's really, so when we talk about how income's taxed, if you just have Social Security by itself, there is no taxation on it. So if you have $50,000 a year as a married couple, Social Security income, you're in a zero federal, zero state, both in Alabama and Tennessee. And I think it's really important to know that you realize and understand as the viewer, the Social Security income is not the problem. It's the other income that you add on the tax return. So IRAs are subject to 100% ordinary income tax, okay?
Yeah.
Annuities, if you have annuities, if certain types of annuities, if they're IRA, they're subject to ordinary income tax. If they're non-qualified annuities, the earnings are subject to ordinary income tax, not capital gains. And then when you get down to your basis, of course, there's no tax on your basis that you put in. So those types of incomes, all of that has to go on the tax return. And I think that people need to understand and really learn about the value of making a good educated decision on Social Security, because the more of an income you have, usually the better your tax situation is, just based on how it's taxed. But we're worried it's going to go broke. We're worried about the break even.
Yes,
We want
yes.
to treat it like a game, and we don't make an educated decision. And I use a lot of tax thought into my decisions with my clients on whether or not to have them collect at certain times. There's a lot of factors that goes into it, and it's way deeper than just the break even. That's the simple analysis.
Yeah,
It's like
that's simple.
Yeah, and I can sit here and say that every one of us today watching the show, yourself included, should just assume that we're going to live a longer than average life expectancy. So you would think that you're going to pass the break even, you're going to be out on top anyway. So if you just go ahead and assume that, then the break even is a moot point at that point. You don't really need to think about it. You need to think about it more in terms of spousal protection. And as we're going to talk more and more about today, is the taxation impact of it all.
So you're saying, we should not approach our tax bill in retirement as something that is out of our control, because we actually can make some moves to take control.
No, there are things you can do in your financial plan to control your tax obligation. So let me say something real quick before we go to the break. Again, going back to that scenario where you have, say, $50,000 of just Social Security income, that's it, you're in a zero federal, zero state. Well, guess what? You have a little window of about $20,000 roughly, give or take, where you can convert or take out of an IRA without having to pay federal income tax on it. You could do a free Roth conversion and not have to pay income tax. So you really need to understand how taxes work and be working with a team that can guide you the right way.
This is why we do this show every week.
Absolutely.
Up next, strategies to help you be proactive on taxes to help reduce their impact on your retirement. And then later, Chris is in the hot seat again for Retirement IQ. Stay tuned.
Are you a federal employee facing early retirement offers from programs like FERA, VSIP, or DRP? Before you make any decisions, call 615-265-1778 to schedule a free discovery session with WG Financial Group. WG Financial Group can help you navigate changes to federal retirement programs. It's your retirement. Know where you stand. Visit WGFinancialGroup.com or call 615-265-1778 to schedule your session today.
How many times in your life do you make $1 million decision? For some of you, that's exactly what Social Security is. Hi, I'm Chris Wallace with WG Financial Group. When you go through and do the math, the average Social Security payment adds up to more than $700,000 over 30 years. If you're married and you double that number, now you're talking well over $1 million. So doesn't it make sense to talk to someone who can help you decide the appropriate time to start taking your benefits? Call us and schedule your complimentary discovery session today. Did you know that taxes could be your biggest expense in retirement? No one can avoid taxes completely, but with the appropriate strategies in place, you could potentially reduce your taxes in retirement. With a plan to help you protect your retirement savings from higher taxes, that's just more of your hard-earned money back in your pocket. At WG Financial Group, helping people like you optimize taxes in retirement is what we do. Call us to schedule your complimentary discovery session today.
I'm here with Chris Wallace, financial advisor, certified financial planner professional, and founder of WG Financial Group. Chris, today we're helping our viewers understand the potential impact of taxes on our retirement. So now, Chris, we want to talk about strategies to help us use so we can be more proactive on taxes in retirement.
Yeah, so the first thing I kind of want to point out is there's a major difference in having your taxes prepared and doing planning on the front side, okay? So I always hear or see on social media, I need someone to do my taxes.
Yeah,
I need someone
to do my taxes, yeah.
There's a lot of people that can do tax returns, but they don't really do tax planning, okay? And like I said, there's a major difference in that.
Right.
Tax planning, that's forward-looking. Tax preparation, it's already done. You got to get that thing filed. You got to hurry up. It's all historical. Some things you can't do. Like, for example, Roth conversions have to be done by the end of the year. So by the time you get to your tax preparation, you're doing your tax return, you're like, man, I'm in a really low adjusted gross income, or I'm in a really low tax bracket. Everything, my income's really low. I should have done a Roth conversion. Yeah. Too late.
Right.
So you missed the year. So you got to be forecasting some of that stuff. Another example would be money markets are paying a pretty good interest rate right now because interest rates are higher than they were a decade ago. You have $100,000 sitting in a money market making 4%, that's $4,000. If you're in the 22 bracket, that's $880 of federal tax obligation that you're going to owe. So recognizing some of that stuff on the front side as you go through the year to say, okay, is there any place I can move money so that it's sheltered a little bit better from taxes, or maybe in a municipal bond or something like that, so we're not subject to that. So I think that as you're looking forward, tax planning is critical, and I think that's something we do really well at the firm, is looking at a lot of things through a tax lens. Mm-hmm. So my staff knows when we go through our process and we start working on that RITE retirement report card that we have, there's a lot of tax things that we look at. Now, we're not CPAs and we don't give tax advice, but as a certified financial planner, there's a book about that thick that you have to go through to pass that test. So you have to understand the basics of the tax code. So if you're watching the show, that's one of the pieces of advice, is understand the basics of the tax code so you understand how money is actually taxed. And that's part of the whole tax planning process, is just the forward-looking side of things.
Yeah, okay, I like that. And again, we talk about your process, which is the RITE retirement process. The R is retirement income, the I, it's an acronym. The I stands for investments, the T, tax strategies, and then the E is estate and legacy planning. So on this tax strategies, tell us about some strategies that you've used before to help people reduce their tax bill in retirement.
Well, I'll give you an example. I don't manage my father-in-law's money, but when he and his wife started Social Security, he told me that he was going to take money out of savings to kind of bridge a gap at some point. And I said, why would you do that? Why wouldn't you take out of your IRA? Because all you have is Social Security income, and you can take this amount out of your IRA without any tax. And then if you want to stay in a really low bracket from there, then go ahead and take out of your savings. So that's a strategy that I've just, again, I don't manage his money. I don't do their retirement, but it's inevitable when you have family and friends and you're a financial advisor. It's like when you're a doctor and you're at the gym, they're going to say, I had this pain in my knee. Yeah. It's no different when I'm at the gym.
Right.
People ask me questions too. Well, so does your family.
Hey, yeah,
so we have conversations. And my father-in-law is always real respectful about it. He tries not, but I don't mind talking about it. That's kind of the neat thing about me, is I'll talk about it.
You love it.
Yeah, yeah. So I think there was a strategy right there. I think also we can look forward and say, you know what, if I'm in the 12% bracket and I've got room, why not do a Roth conversion at 12%? Mm-hmm. It just makes sense. I mean, we talked about doing the free one, right? When you're just Social Security income, there's that little window where you can pull money out and convert it. But even if you're in that 12 bracket, I'd even argue the 22 in some cases, depending on what your tax picture may look like 10, 15 years down the road, could be advantageous as well. But at least the 12% bracket. The other thing I'll talk about in terms of tax strategy is, if you're sitting on highly appreciated assets, a donor advised fund, if you're charitable, you can use a donor advised fund, capture some deductibility there on your tax return. If you have a highly appreciated asset, like a really highly appreciated stock or another asset of some sort, you can use a charitable remainder trust. There's some deductibility there. Money goes to charity, creates income. So there's all kinds of strategies that you can utilize. It's not just claim Social Security and that's most tax efficient. Yeah, that's important because Chris said it's important, But there's all types of other tax strategies that you can use as you kind of go through retirement as well.
So what I love about the fact that you have your certified financial planner, planning certificate, is that you know all this about the taxes, you understand it, and then you can direct them
Correct.
to a CPA.
Yeah, correct.
They want to dig deeper.
That's exactly right. So we put together the plan, and I always tell the people that I'm working with that you'll want to have this blessed by your tax accountant,
Right.
CPA, or whoever does your taxes. But this is how I think you should do it. A lot of times, a tax person is not going to be forthright with that information. They're going to do your return, and they're not really going to talk about things. There's another, if you're a solo business owner, like it's just you're a sole proprietor. Well, guess what? Maybe you should look at something called a solo 401k. A lot of people that are solo business owners use what's called a SEP IRA. I like a solo K a lot better. There's some advantages to a solo K over a SEP IRA. So again, just having the relationship with somebody, and we've talked about on the show before, having a tax person, an estate planning attorney, but also having an advisor that has some experience in the industry, has the background, the designation. Obviously, I have a strong bias towards certified financial planner. I passed it years ago, and it basically introduces you to the things that I think you need to know to be able to do full-scale financial planning. But yeah, those are just a handful of strategies. There's just lots of other things that we could do.
Another could be the Roth too. I want to bring that up too.
Oh, for sure. Roth IRA is definitely a great tax strategy. Right. I think they have their place. I think if you're in your low earning years, it's Roth no matter what. And there'll be people that will argue and say you should always do Roth because you don't know what the taxes are going to be in the future. Yeah, I tend to disagree with that.
Yeah.
I think the majority of people today watching the show, assuming that tax rates don't go crazy, are probably going to be in a lower bracket in retirement most of the time, not all the time.
Wonderful. Yeah. All right. Thank you for all of this. Straight ahead, Chris is in the hot seat for Retirement IQ. And later, what are some simple actionable steps you can take to help improve your financial future today? Chris has your checklist challenge. Stay with us.
Are you a federal employee facing early retirement offers from programs like FERA, VSIP, or DRP? Before you make any decisions, call 615-265-1778 to schedule a free discovery session with WG Financial Group. WG Financial Group can help you navigate changes to federal retirement programs. It's your retirement. Know where you stand. Visit WGFinancialGroup.com or call 615-265-1778 to schedule your session today.
If you're worried about higher prices in retirement and you're worried about losing too much of your money in the stock market, I think you've got enough to worry about. Hi, I'm Chris Wallace with WG Financial Group. If the thought of losing too much of your retirement savings in the market is keeping you up at night, I can help. My team can review your portfolio and help you identify any changes that could be made to help you feel more confident about your money. Don't stay up all night worrying about your retirement. Call us and schedule your complimentary discovery session today.
And now it's time to put our knowledge to the test with this week's Retirement IQ. You ready for this, Chris?
Yes, I am.
You always are ready. Okay, so we've talked today a lot about taxes and what you can do about it as far as your retirement goes. So our questions are all about taxes, okay? All right, first question, true or false question. Social Security is a tax-free source of income in retirement.
That is false.
Correct.
Yeah, Social Security, we talked about that a little bit earlier in the show. It's subject to 85% of it's subject to taxation. Like I said earlier, the more of it you have, usually the better off you are. Make an educated decision with Social Security.
Do you think a lot of people get into retirement, some people, and don't realize they have to pay taxes?
Absolutely, they do. Now, it's been floated around with the current administration that they want to remove taxation. I know you're excited about that. Social Security, taxation altogether. Right. I just don't see how that's going to pass, in my opinion. But today it's taxed. But yes, there are a lot of people that get to retirement and they think, well, wait a minute, I'm having to pay taxes on my Social Security. I thought
I already paid, kind of,
No, you didn't really pay taxes on it. You paid into.
Yeah, you just paid into it. Yeah. Misunderstanding. Exactly. Okay, very good. Next question, true or false also. California first imposed the jock tax against athletes from other states in 1991 after Chicago beat Los Angeles in the championship.
Yeah, this is true.
So, sore losers?
Yeah.
That's what I say.
Yeah, they imposed the jock, and then many other states followed after that. So basically what that is if an athlete goes in, he has to pay state income tax, and also the municipality where he or she plays, they have to pay income tax there too. But yeah, that was I read a little bit on that in the past. It's when the Bulls beat the Lakers, you know, so Jordan back then,
Sure,
the GOAT, you know, of basketball.
Sure.
They laid the smack down on LA, and LA say, you know what, we'll just start imposing a jock tax, and they hit the Bulls with some taxes.
Oh my gosh! And then it just took, you know, everybody else started doing the same thing.
Yeah,
so
91 was a great year too.
Yeah?
I mean, but not only did the Bulls win the championship, but that's when I graduated high school. So yeah, a long time ago.
Make me feel old. 91. You were just graduating.
Yeah.
Okay, moving on.
Yep.
Number 3, true or false? West Virginia charges a safety fee on top of a regular sales tax when you buy fireworks.
Yes, they do, and I think some of that goes towards some fire funding or something in the state.
The state's fire protection fund.
Yeah, we lived in
Not a bad
Virginia
idea.
for a little while.
Oh, did you really?
A little bit of knowledge on that as well. Yeah.
It also goes to the Veterans Facility Support Fund. So it's all good stuff, but 12%.
That's a lot.
So you pay taxes when you buy your fireworks, and then another 12%
And the safety
fee.
tax, right? Yeah. A lot of woods in West Virginia.
Yeah, that's true.
So it's a pretty state. We don't want it all burned down.
Okay. Another question here, true or false? The IRS tax code is nearly 10,000 pages long.
No, it's not. It's longer.
More.
Much longer. It's somewhere, I want to say it's about 70-ish thousand, maybe 75,000-ish pages long, something like that. I remember reading some of this stuff you kind of read online, and you pick up these little nuggets and you kind of retain that senseless knowledge.
75,000 pages is what it adds up to.
Yeah.
You have the tax code,
Yeah.
the federal tax regulations, and the official tax guidance.
Yeah.
Wow.
Yeah, you know, it takes Congress to pass a new tax code, right?
Yeah.
Do you think they read all 75,000 pages?
No, they're probably repeated in there.
No.
They're probably the same ones.
No, I don't think they read it either, which it's kind of scary if you think about it.
know.
You vote to pass something that's 75,000 pages thick.
You
And
need to make them read it.
yeah, like
And trim it down, I say. That's their assignment. That should be their assignment.
It could be pretty simple,
It
in my
really
opinion.
could be simpler. We all know that.
Yes. So yeah, I think when it comes to taxes, Luann, I think we have to really think about that and put some thought into it, and not just assume that we're going to pay taxes in retirement. There are things, as we talked about in these previous segments, where I believe that a family can control the amount of tax they pay to a certain degree. Now, you know, I'll say it like this: if you have Social Security and a pension and IRA money, there's not a lot you can do. You can think about QCDs when you hit 70 and a half and start charitable giving that way. You can give in-kind stock. But if you don't have that kind of stuff and you've just got an IRA, pension, Social Security, there will be some limitations on, you know, how much you can actually do.
Okay, very good. You got all 4 right. Thank you very much for your insights again. Still to come, you'll learn some of the simple steps you can take today to potentially help you improve your situation. Because how useful is knowledge without action? Stay tuned. We'll be right back.
Are you a federal employee facing early retirement offers from programs like FERA, VSIP, or DRP? Before you make any decisions, call 615-265-1778 to schedule a free discovery session with WG Financial Group. WG Financial Group can help you navigate changes to federal retirement programs. It's your retirement. Know where you stand. Visit WGFinancialGroup.com or call 615-265-1778 to schedule your session today.
Did you know that taxes could be your biggest expense in retirement? No one can avoid taxes completely, but with the appropriate strategies in place, you could potentially reduce your taxes in retirement. With a plan to help you protect your retirement savings from higher taxes, that's just more of your hard-earned money back in your pocket. At WG Financial Group, helping people like you optimize taxes in retirement is what we do. Call us to schedule your complimentary discovery session today.
Thanks for joining us today on the RITE Retirement Show with Chris Wallace. Chris, we've had a great conversation today about helping our viewers understand the strategies that they can use to reduce their tax bill, try to keep more of their own hard-earned money in their own pockets. We've learned a lot today, and like we always say, the saying goes, knowledge is power.
Yeah, if you don't apply it, right?
Right. Gotta apply it, though.
Yeah. So let's talk about some takeaways, right? So the first thing I want the viewer to do is really gather their accounts and understand what types of accounts they're investing in. You'd be surprised how many people come into the office and they don't know what types of accounts they have. If you can start creating different types of taxable accounts, taxable buckets as we like to call them, I think that's probably another thing that can be done. And you can do that in your pre-retirement years. I think you have to start thinking ahead of the game, a little bit ahead of schedule as you're later in your working years. But I want to give one good takeaway today that we didn't really mention, but I personally use myself, and I think it's probably one of the greatest things in the tax code, and that is the health savings account. So that type of account must be paired with a high deductible health plan. And I don't care if you say, well, my health plan has a high deductible, it must be a high deductible health plan that allows contributions for an HSA. So you got to really double check that. The HSA is a health savings account where you put in pre-tax money. So what does that do since we're talking about taxes? It lowers your gross income, okay? While the money's in there, a lot of times you can invest it. So now it's growing tax deferred. So when in tax deferred, still growing tax deferred, lowered your gross income just like an IRA does or 401k does. And then you can pull it out on the backside tax-free for qualified medical expenses. So if it's done properly and you follow the rules, you never pay tax on that money. So it's a great thing for the high income earner that has money in savings to cover a high deductible, to really lower their gross income, but also to give you a health savings account that you can pull from tax-free. Now, here's the cool thing. It's not an FSA. So a lot of people get FSA and HSA confused. FSA you have to empty out, HSA you can roll over. That's the beautiful thing about an HSA. So again, I personally own one. I don't sell them, by the way. This is not a pitch to sell HSAs. It's just to educate the viewer.
Right.
I'm allowing mine to grow, all right? So I'd mentioned earlier I'm in my early 50s. So I want my HSA to grow because that'll become my health savings account when I'm retired. So I'll dental work, because we all know dental insurance is not that great.
Right.
I can buy my glasses with it. If I need hearing aids, my wife would tell you I need them now. I can buy them. The list of items that you can pull out of the HSA is a very liberal list on the IRS website, but I would encourage you to look at that in your open enrollment HSA plans. There's your nuggets.
Gosh, thank you for all these nuggets. Always great stuff. Thank you so much, Chris. The retirement landscape is constantly changing, and Chris and his team are here to stay on top of all the latest news so that you can spend your time doing what you love with the people who matter the most to you. For Chris and our team at WG Financial Group, I'm Luann Fulmer. We hope you have a great week, and we'll see you next time.
This program is sponsored by WG Financial Group, where your retirement matters.